windows. Let's get a couple more questions in here. Heat saying, Nick, do you usually try to wait until price gets back to the top of the red bar high before shorting if the time counts are getting close? Yeah, I always wait. I always try to wait for that. That's why it'll usually do it on 7, Heath. Not always, but notoriously it will. So, and I usually look for a pierce too because it happens all the time. And like I said to you guys, once you learn this and you're learning it for the first time today, don't take my word for anything. Practice it. Just observe for a while until you build the confidence, and then once you build the confidence, it's game away. I mean, you guys will be able to. I can't tell you how many traders now contact me all the time and say, Nick, I just can't believe it. I'm doing this for a living. My life has completely changed. So, you're going to have to take it slow. Go with small share size if you're going to trade it live, and trust it. Work on it. Don't take my word for anything. Just let the charts prove it to you. Okay? Just let the charts tell you what to do. And that's going to be the difference maker. We're going to get into time frame analysis, Leo, a little later though. Okay? So just bear with me. Right now you're just trading the time frame that we're looking at. But I'm going to get into time frame analysis later. Okay? We got a lot to cover. Guys, we're only on segment 3. We got 20 segments to cover today. This is just segment 3. So, we're not looking to rush it today, but I just want to let you know there's more coming. There's a lot more coming. We're going to cover a lot more, and as we put everything together, like I said to you when we first start, the pieces of the puzzle will start to fit together. Okay? Lily saying, Nick, the first pullback to the 20 MA is usually a buy, but when the 20 moving average becomes minor. Yeah, the first breakout, just to go back, Lily, because this is pretty important. Are you coming from an extended place, or are you coming from like here? Would you consider this an extended place? $9, $8.50 to $5? Is that an extended place? Absolutely. So write this down, everybody. All moving averages. When price comes from an extended place, the first hit of a moving average is major. That's how you remember it. Okay? Okay, the first one. All right, we're going to cover this more too. Don't worry, there's a lot more to come. All right, we're going to talk about gap windows. I love gaps. I trade morning gaps. But today we're not going to talk about morning gaps. We're just going to talk about regular when gaps occur, how they're very good support and resistance levels. Okay? So a gap can occur 2-3 weeks ago, and maybe the stock is finally pulling back, and that gap window will serve as excellent support level when it's filled. So I'm going to show you everything I know about gaps here, about gap windows. All right? We're going to start off with this chart of Chesapeake Energy, and I don't even care what it is, but here's a daily chart, and you're going to notice right here, price moving down, 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 and you got a gap, right? It closes here, opens here, sells off. What does it do? It consolidates inside the red, okay? Gaps up and then sells out, all right? This here part right here is going to be excellent resistance, and if it does come up, this will also be excellent resistance. If it trades higher, this will be excellent resistance. And the wicks, or the tails, as they're called, or the shadows, they'll also be resistance levels if price were to move higher. Okay, but what happens here? Down bar, inside bar, 1, 2, 3, 4, 5, 6. Boom. Gap up, drop on 7. Okay, everybody see that? Now, if you're looking for, say, 2 points here, what kind of drop would you be looking for? Because it's also an inside bar. 2 points, yeah. Start to look for 2 points. All right, pretty simple. All right, but notice, not only did you have the gap, you had the inside bar. Couldn't get through. All right, but if it were to come up here, you'll have resistance at the wick and then at the body. Then at the body up here and also at the wick. Okay? Mike M saying, Nick, can you make sure to cover the difference between gap window and gap fill? Yeah, we're going to get into it, Mike. Relax. Relax, buddy. We'll cover it all. All right. That was gap window. Here, we have a stock, Goldman Sachs. Boom. Big, big move. Sells off through the whole entire day. Where does it go? Right to gap window. Also notice it even pivoted for a bar right here. But look how it comes right into gap window at the open, and then you get a huge reversal right back up. Okay? Can you take this trade at the open at 163? Can you take that? 10-minute chart. Day trade. Absolutely. What are your reasons for taking it, San? What are your factors? What are they? What are your factors here? Well, you got the gap, and then you have 163, whole round number. Okay? Excellent. How many factors is that? 2. Yeah. 2 factors. Okay? Is there a time count there too? Let me see. Well, I don't even know. That's a lot to count. But either way, you got 2 factors right there. This would be gap fill, Mike, because you came back into the body. Okay? See the close of the body? You came back into, that's gap fill. All right? This would be also a support level, and you see you do get a quick bounce the day before. All right? If it were to trade lower, this will also be support. But the best support levels are the first hits back into the body. The first part of the body, whether it's red or green. Okay? Write that down. Write that down so I don't have to say it again. Write that down. Steven Sanik, is gap window the close of the initial gap? It's both parts. So here's your gap window. Here's the upper gap. Here's the lower gap. Okay? Upper, lower. So this would be the gap fill. Right there. Okay? That would be the gap fill right here. Les Sanik, why do stocks fill the gap? Why not? You have a big move, right? So they create a gap in the first place. That happens because institutions want to buy before the open, and that drives the price up. Then price opens up, gaps. But, you know, eventually all gaps usually will get filled. Not always, but generally all gaps are meant to be filled. But remember, there was a buyer here, a big buyer. And, you know, somebody got in there and somebody will support it, right? So, again, the person here is in a lot of pleasure when the stock gets up here. The buyer here is in a lot of pain. Okay? So you've got good buyers here, and they're going to generally support it, at least short term. That's normally the way it works. The best support levels, Mike, are going to be the body of the candle. I always feel that it's the first hit of the body. Okay? But sometimes red candles, you know, they'll take it down a little bit lower. Sometimes green candles take it down. But generally, the first hit of the body is going to be very, very good. In this case, you know, you also have the 163. But we're going to cover this more, okay? I'll show you some more techniques with it. Here we have a gap, 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 gaps. Look at all these gaps in this gold chart. I mean, it's tremendous, right? All right, so remember this chart. We're going to come back to this later. All right, I'm going to show you where we would take the trade on this chart. So everybody take a little mental snapshot of this chart. We're going to come back to it. All right, but I just want everybody for the time being to see all these little gaps in here. Okay? And we're going to come back to this later. I'm going to show you where we would take a trade. In fact, not where we would, where we did. All right? Here's a chart Nice gap right here. Okay. But look at this. What kind of trend is this? What kind of trend is this on this chart? Up or down? Oh yeah, it's down. It's down sharply too. Big downtrend. So that's a nice downtrend there. This is a chart of Chipotle Mexican Grill. Now that stock's $600. So here you got a big downtrend. Here's your gap down. Price rallies back up. But look at this. It never gets to these tails, nor does it get to the body. It pierces through $65 and sells off. Does anybody know why? Does anybody know why? Whole round number, Mark. Well done. Mark P. Excellent. Yep, you got it, Jim. Whole round number. Okay. Gets right there, can't hold, and it sells off because the downtrend is severe. Okay. Now look what it does. Sell, 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 sells. How about here? 20 moving average. Major or minor? Right here. Minor. Yeah. That's minor, minor, minor. All right. That's minor. How about this? 50 MA. Major or minor? Oh, that's major. Whew. That's major. What do you have there? What do you have on that chart to tell you can short that equity? What do you have there? Well, from pivot low, you have 1, 2, 3, 4, 5, 6, 7. Look at this. Whoa, major breakdown bar. Is that a good resistance level? Yeah. Yeah, you got 57, probably 57.50 MAC on that. Also, next candle, if you didn't do it there, you got a narrow body bar, right? That sends the stock back down to a new low. Okay, so you don't always got to catch them to the minute or to the high. You know, you could look at them the next day and say, oh, this is going down. You don't always got to be, perfect with them. All right, a lot of times I'm not perfect with them. All right, but look at that. Nice reversal, narrow body bar after 7 count. And boom, you get the breakdown. Now watch this. Price rallies up. Okay, stalls here for a day. Comes in, starts to rally back up. Look how it hits this pivot and consolidates 1, 2, 3, 4, 5, 6 days, then breaks above. But look what it does now. Watch this. I could just draw it straight, be great. Gap fill. Bingo. Sorry about that. But you get the gist of it. Can't draw the lines perfect. Gap fill. It actually fills this gap right here. All right? And then sells off for 1, 2, 3, 4, 5, 6, 7 days. First pullback into the 20 from a breakout is what? Buying opportunity. Yeah. It's pretty amazing. Okay? But look, it finally fills that gap all the way back there. Pretty amazing. A lot goes on in a chart, right? So you probably have heard me say this in the chat room before, but I'm going to say it to you here. A lot of times I have a nice big home office, and my wife will come in there. She'll bring me a cup of tea or something like that, and she'll say, what are you looking at for 2 hours out here in this room? And I'm like, she's like, look at this. It's like a bunch of chaos. You know, you got lines going across. You got things moving up and down. And I say, honey, what looks like, chaos to you is a Picasso to me. So once you learn how to read this and you start to decipher it, it becomes easier. Joanne saying, Nick, gap fill is at the body of the candle, not the tail. Correct, body. This is your best part right here. Okay? I could just ever draw it straight. That's your best part. But there, it can stop there, can also go there, but this is going to be the strongest, the first hit of the body. Sometimes it'll go to the tail, but I'm going to say notoriously, Johan, 95% of the time it's going to go to the body. Okay? Lucas saying, Nick, looks like the Matrix movie. You see the patterns. Yeah. I mean, This is what you get when you look at charts for so many years. And then when you look at the legends of the business that were around in the late 1800s, early 1900s, these guys wrote charts by hand, right? They wrote charts by hand. Later this year, I'm going to try to do a different webinar for you guys if anybody's interested, and I'm going to show some actual charts that I got from old-time traders that they did by hand using graph paper. It's pretty incredible. But charting's been around for a long, long time. In fact, if you just take a look at the ancients, the charting started with them, right? They were hunters, and they were looking, to search for food. How did they locate food? They used to use the footprints of animals, and they would backtrack it all the way to where the animals had their den or their resting place, right? So charts have been around from the beginning of time. If you take a look at, any of the sailors from the 1400s, right? They were all mapping out charts. So it's still, this is our best bet to make money in the market. You use charts. Susan saying, Nick, the tails are movements, but the bodies of the candle is the open and close. Correct. Correct. Oh, you'll be there, Mark. Okay, excellent. That's good to know. That's excellent to know. All right, let's go to the next slide here. Here we have a chart of Bank of America. Kind of reminds me a little bit of that Goldman chart, but this is an hourly chart, and you're going to see, look at this gap. Then you get kind of gap fill right there, right? Goes back down, comes back down, pierces $12. Actually has its gap fill right around that area. 1, 2, 3, 4, 5, 6, 7. 7 bars and get your pop-up. All right? So you're going to see these gaps occur all the time. Any questions on gap windows? And we're going to cover more of this, all right? We're going to start mixing things up as we get into new strategies, whether it's Fibonacci or we get into different trend lines. You're going to see the same patterns appear, okay? And we'll talk more about everything as we keep going and the pieces of the puzzle start to come together. Okay? Jim's saying, Nick, does the distance of a large gap equal the distance of a later gap? Like large? No, they don't. No, unfortunately, they don't. I have never noticed that. They say, Nick, are the commercials buying or selling at gap windows? I'm not sure. It's usually institutions, though. Okay? Which ones? I don't know. Lucas saying, Nick, time for a 3-minute break? No, we've only been going an hour. We got to go a little longer. Okay? Just a little bit. We'll do one more segment. We got to go a little bit longer. We're way behind time. We're not going to finish tonight till 8 o'clock at night at this stage. So we got to catch up a little bit. My wife does have dinner reservations, so it can't be too late. But I gave myself 8 hours today, so I figured, we have a large group, we had a sellout group. We had to turn actually people away today, so I gave 8 hours. So that should be good. 6 o'clock we should be wrapping it up. Excellent, excellent. Lily saying, if narrow body bar must represent in the inside bar pattern for us to consider a trade. No, it doesn't have to, Lily, but it's going to help you. All right? Remember what the narrow body bar is, like the poker face? It's the tip off. It's kind of like somebody winking at you, saying, hey, look over here. Watch what I'm going to do. It's kind of talking to you a little bit. But for an inside bar, no. You don't have to have it, but it helps if you do. Okay? Stephen, how are you? Stephen saying, Nick, do gaps work when trading ETFs based on commodities? Yes. Yeah. Anybody here ever trade the spiders with us or the futures? We don't even use the futures chart. I mean, I have a futures chart, but I don't even use it. I use the spider chart with the East Coast time so I can see the gap. So that answers the question. The answer is yes. Scott saying, Nick, the long inside bar, does it matter if it's caused from earnings? Pattern is all that matters. Okay? The pattern really is all that matters. Alan Sanick, do all the factors apply to leverage ETFs? I would use the single ETF. I would not use a leverage ETF. Use a single ETF. Great question, Alan. I'm glad you brought that up because I would have felt bad if I would have forgot it. But no, you always use a single ETF. Do not use leverage ETFs. You could trade the leverage ETFs off the single ETFs, but I don't like leverage ETFs for that reason. They get distorted because there's so much leverage. They're always set to go to a penny. Dan C saying, Nick, need good daily volume for all these techniques. I like to trade stocks that generally trade around 1 million shares or more a day. That's going to give you your best reads because that's where the institutions are. You trade with illiquid markets, the moves can be much, much bigger in both directions than one is expecting. So it's good if you're on the right side, it's bad if you're on the wrong side.